guys, it's me, Teresa Perrin. Let's try this again. I'm going to discuss Carvana and the earnings disaster and why I think that this could be a potential swing trade or day trade for this week ahead. Guys, please remember nothing I say is financial advice. Always do your own DD, and this is a very high risk and not a play that I would recommend holding long term at this point. Could it potentially be in the future if the business model gets better? It could. However, right now, personally, I'm just looking at an elastic band type situation where it's been just dragged down so far that eventually that band has to snap upwards, right? And when it does, I think it could make a significant move. Again, I am not looking to make out on this and hold it long term as far as, buying and holding. I am looking to play this run if it should happen, and it is high on my watch list. Now, I apologize, but I did put out a video earlier that unfortunately I've been away from my computer all weekend, and I didn't realize that YouTube had been running apparently all weekend long and had something on a different screen that was in the background. So I apologize. And just before we get started, I am going to make this a little bit shorter because I found the other one was too long, and I'm going to show you technical analysis at the end. So please stay to that. I'm going to minimize a little bit of what we're talking about though. So let's get started. And again, this is not a recommendation to buy, hold, or sell. You got to make that decision on your own, and I never will make that for you. Okay, guys, so Carvana, in the third quarter, their revenue fell 2.7% year on year to $3.4 billion, while the net loss jumped to $283 million from just $32 million in the third quarter of 2021, the company said in a letter to shareholders. Guys, that is quite a disastrous earning that no company wants to see. Now, they did say that they see some price, they're very unstable, to be perfectly honest, with what they're seeing as far as guidance goes, which I think was a bigger problem. But some of what they said is bullish. But let's take a look at what this article is showing. It says that the daily drop translated into approximately $992 million of lost market value. The company only has a market value of $1.56 billion. Guys, this is down substantially. December 31st, 2021, their market cap was $20.84 billion. A year later, they lost $18.4 billion, leaving only $1.56 billion market cap. Guys, that's crazy. That's a 96.2% drop since January. A lot of stock analysts have downgraded this, and we're going to talk about that in a minute, but the company is extremely optimistic, okay? It says industry demand, interest rate, and depreciation headwinds are slowing our progress on overall profitability, co-founder and CEO Ernie Garcia told analysts during the third quarter earnings call November 3rd. We made gains here, but they were slower than we would have liked, and these headwinds are likely to persist over the near term, making precise forecasting of that progress more difficult. Again, in other words, saying they're not going to offer guidance. There are three key headwinds we are facing right now: industry level demand, interest rate increases, and vehicle price depreciation. Garcia ruled out the idea that Carvana needed new funds immediately. Now, to me, that's bullish because that's saying that they're not planning to do an offering. At least that's how I'm reading that. Let me know if you agree in the comments below and you think that that's a bullish sentiment. We've got a bunch of committed liquidity. We've got a bunch of real estate. And I think that we feel that puts us in a good position to ride out the storm. And we're making great moves inside the company. I think we're extremely optimistic about riding all that out. And then I just think, as it relates to hypotheticals, we'll stay away from those. We're just going to keep running our play and moving forward. Now, guys, a lot of people that have used Carvana really, really like them and feel that they offer good value. Now, this gets really interesting. So, Gergavin on Twitter, who, if you guys don't follow him, you should. He's full of knowledge. He said, a couple months ago, Morgan Stanley raised their Carvana price target to $420 a share. Yesterday, they lowered it to $1 a share. Yes, $1 from $420 just a few months ago. Now, guys, that was actually back in February or March when they did that, but that's a substantial move for just a few months, okay? Now, here's something that he responds to his own comment. He said, price targets don't really mean anything. If the stock goes up, analysts will raise the target. If the stock goes down, analysts will reduce the price target. And guys, I believe that firmly. And I believe that obviously Carvana has been a falling knife this entire year, but eventually when that goes back up, watch how quickly the price targets get raised. Now, Carvana raised to overweight at Morgan Stanley, $400 price target. Guys, Adam Jonas, the same person who's giving it a $1 to $40 price target and a bear thesis of 10 cents a share, is the same person who back in March said it was valued at that the price target should be $420. Again, guys, that's absolutely crazy, and it makes no sense. It really makes no sense. That's a significant decrease, and if he really felt that way and changed his mind that much, maybe he should start reconsidering what he's doing, because that's just nuts. Carvana hits a 5-year low after Morgan Stanley pulls the rating. So this same Adam Jonas, guys, caused the shares to plunge to the lowest in more than 5 years after a Morgan Stanley analyst pulled his rating on the auto retailer and said its stock could be worth as little as $1. The deteriorating used car market and volatile interest rate and funding environment add material risks to the outlook. Morgan Stanley's Adam Jonas said in a note Friday after Carvana reported quarterly results that missed estimates. He pulled his $68 price target and said his new base case is that the company may be worth $1 to $40 a share. Now, you'll notice the headlines went crazy on that and, basically called that out at the $1, leaving out the $40, many of them, and also pulling out the fact of his bear thesis that it could be 10 cents was another one I was seeing floating around. Guys, Carvana declined 39% to $8.76 in New York trading, the lowest close since May of 2017. Jonas had a $430 price target for the stock as of early March and rated it the equivalent of a buy in early May. Now, I believe sometime in between he dropped that to like a $58 or $68 price target. But guys, this is like serious flip-flopping going on here. And at shareholders' expense, I feel bad for those who've been in this play since, it was, look at the 52-week high is $307.11. And if you listened to him then, you would have thought it was going to $420. Now it's trading at $8.95 in the after hours. 52-week low is made on Friday, $8.37, which, guys, is below, I believe, the 5-year low. The stock's trading just disgustingly low. The volume was much higher than normal at 11.12 million average, and it traded at 71.1 million on Friday. And much to people's surprise, the net inflow, meaning those buying, far exceeded the outflow. The inflow was 248.32 versus an outflow of 233.15, or a net inflow of 15.18. So clearly a lot more buying than selling. Now, what does that mean? When the price falls and capital flows in, it means that some capital is entering or short positions are being covered. Now, if you guys are unaware, well, first let me just quickly show you. Carvana has missed on the last 4 quarters, including when they upgraded it to that $420 price target, okay? So I'm not sure why it's dropping the way it is. It's not like this is a surprise. I mean, the estimated EPS was negative $1.94, and it came in at negative $2.67. So yes, it's a drop, but it's actually above Q1 of 2022. Guys, it's kind of like the housing market right now. With interest rates rising, it's not good for homes, and it's not good for cars or anything else that people have to take loans on. Why? Because the price of those things fall. You'll see the housing market starting to fall, and it will continue to fall as interest rates go up. Same thing with the car market, guys. So this could be an opportunity to get these shares really, really cheap. If this company does continue to follow a business plan and go back to being a profitable, or goes to being a profitable company, then I really think that we could see some massive growth in the future. However, if things get worse for the economy, this makes it a very high risk play because it could be in a lot of trouble in the future as well. And it's very hard to say that at this point. But guys, in my opinion, this is, a short squeeze waiting to happen. If anything positive comes in or buying comes in, because look at the short interest is 39.97%. Go back and watch the video I did on Carvana before earnings, because I was very confident that if anything bullish came out of it, it would have the potential for a short squeeze. And we've seen it run many times on poor earnings. So will it run this week? That's what I'm kind of thinking. Nothing's guaranteed, but it's in the back of my mind that it could, guys, because these shorts have an opportunity of a lifetime to cover this low right now, unless they really believe this is going to nothing. But again, at some point you want to lock in your profits. So has it reached that point? Well, judging by the buying that I saw on Friday, even though the price was falling, which didn't add up, it tells me that it's hit that point where now shorts are closing out their positions. So how long is it going to be, guys, before this short interest comes into effect and we have the potential to squeeze these shorts out? In my opinion, it's possible, which is why this is going to be high on my watch list this week. The short interest on Friday was over 40% going into the day, and now it's at 39.97%, and the days to cover have been reduced, and that's solely because the mass amounts of shares being bought right now, it's down to 1.33 days. If you go back and watch my other video, you can see the comparison. And I still think that this can short squeeze, guys. The short shares available is 450,000, and the cost to borrow is cheap, only between 1.83% and 2.11%. Again, failure to deliver is I'm not even going to bother with, because there's plenty of shares available to borrow that they do not matter. But guys, keep this on your radar. I'm going to show you the technical analysis now.
Again, a reminder that this is a very high risk play, but guys, what I'm seeing is that the RSI is very oversold. It's back in that territory. So this is on the daily chart as well. I do believe that we do see something like what happened with Snap and get a rebound rally in the stock. Do I think that it's a good long-term hold? Not at this time, but I do think that it's a great opportunity for a trade, provided we get confirmation. Now, if you look at the MACD, the red is still above the green, which is a bullish indicator. So I am going into Monday expecting to see some sort of a rebound rally in the stock. I mean, guys, we are close to all-time lows. This is absolutely crazy. If I pull up the 5-year chart, you can see that we hit all-time lows. I think they were $8.14 when that happened. But guys, this is just absolutely crazy. I can't even believe the hit that the stock has taken. Again, looking at the 5-year chart, as you can see, the red is crossing above the green. So is this the bottom? That's a great question, yet to be answered, but I do believe that this stock is going to get some sort of a rebound rally. Again, it's oversold on the 5-year chart, and as you can see, at the end of the day, volume started coming in. Now, if you want to look at a shorter time frame, let's look at the daily chart and go to 5 minutes. So we're trading above 50 on the RSI, which is great. And the red, again, is just touching that green. So it's like kind of indecisive. So I am very curious to see what this does on, opening on Monday. It should be very interesting, but I would not be surprised to see some sort of a rebound rally in the stock. It has been beat down very, very badly. Again, the outlook on it is quite ugly right now. Does that mean that they can't recover at some point? They absolutely could. But again, I think it's very high risk right now to be holding this long. As far as swing trading it goes, it could present an opportunity. Again, I'm not recommending that you buy, sell, or hold the stock. That's a decision that only you can make. I'm just pointing out an opportunity that I see. Quite honestly, I thought that if during earnings we got any kind of a good outlook or, any kind of a beat or anything, that we would see a rebound rally in this stock at that point. Unfortunately, earnings were horrible and that did not happen. However, guys, keep in mind that that short interest is still very, very high. And as I showed you previously, the buys far outweighed the sells, and the price action did not make sense for it to fall the way that it did. I do believe you saw a lot of shorts covering, and that was what was causing that. Anyways, guys, that's all I got for you on Carvana. Please keep in mind, again, this is very high risk, and just know that going in, and I would be very diligent with, setting either in your mind or physically stop losses on this to keep yourself safe. Remember, you can always sell and buy back. Thank you so much for watching and have a great day.